Hey traders, this is Ron Haidt at Market Tamer. Happy Monday. Hope you guys had a great day. As always, nothing in this presentation shall constitute a recommendation to buy or sell any security. Trading stocks and options involves risk, and specific financial issues should always be addressed with your financial advisor. We'll kick off here with a daily chart of the SPY, the Spiders ETF. It was down about 0.6% today. We're still standing in a daily bullish posture because we are above the 5-day EMA in blue and the 20-day EMA in red. Target remains the 50-day, which is the orange institutional moving average, which coincides with these previous lows. So, looking out there like 262, 263, still a resistance area. If we roll over here, let's say more selling pressure develops with earnings season kicking in this week and especially next week, then you want to watch this little swing low here and then back down to these lows. If we take a look at the IWM, which is the Russell 2000 ETF, it got really close to its 50-day on Friday, pretty close even Wednesday and Thursday. Today we finished above the 5-day, similar situation to that of the S&P. We're above both short-term moving averages and coming into some resistance areas. This is almost like perfect the way this lines up with the 50-day right here. Now I want to talk about two stocks that we did speak about here over the past couple of weeks, and I said to watch out for. One is GLD, which I do have a bullish position in. I do have some long calls. Gold typically does not do well over the summer and fall, and its time to shine, all that glitters, is late December and then January. The last 5 years, gold's done it via GLD. Same thing again here on GLD. We can see the December rise into January and still slowly pushing higher. This has had a nice run already. So how do we know that this one had a high chance of happening? Because of historical data, because of seasonality, because if stocks do the same thing year after year after year, you can bet they might just do it again. And I said what to watch for. Watch for the volume surges and watch for the stock to start breaking out. The same thing with Netflix. So GLD, 6 for 6. How about Netflix? It did it once again. If I zoom in here and you look at October, November, December, this stock just kept going lower. And in December, it was remarkable how many bad news, or at least the stories that I found, just bad news. Netflix, blah, blah, blah. And then all of a sudden, this is even before earnings that's coming up here, which according to Thinkorswim's on the 17th, the stock puts in a bottom, just like the major market on the 26th, but then look what happens. It's literally 3, 4, 5, 6, 7, 8, 9 days in a row up. In terms of the percent move, it's blowing away the other markets, the major indexes. Netflix got shot out of a cannon. This thing is up since the beginning of the year, which is exactly what I told you guys to watch for. As much as $70. And the long calls, if you go out to March as an example, starting at January 2nd, an at the money call was worth $25 or $2,500 a contract. It's been worth as much as almost $75, $7,500. So 25 into 75. It's stunning what this does. Again, Netflix has an incredibly strong track record once January arrives. So again, if you look at the last couple of years on Netflix, it's the same thing. Nowhere fast or down, and then all of a sudden the explosion. We knew what to watch for. There was the 50-day. Here's the volume, and it even started running ahead. So here's what I want to do. Saturday's event, we maxed out again. It's been incredible. I've never done this before. I'm going to do it. We're going to do two events in one day, and that's going to be it. So we've been maxing out registrations. Please register ASAP. The link's at the bottom of the video. If you're getting this in an email, it's in the email. Pick it. I'm going to do 2, one day, and then it's gone. Noon Eastern on this Thursday, the 17th, or 8 p.m. Eastern. Your choice. You pick which one. If you want to make both, you can, but make sure you register for one. And then once we get to the event date, log in about 45 minutes early and don't leave, or you're going to end up the risk of missing out once again. I will show you the hottest stocks for the coming weeks, not based on my opinion or someone's opinion. It's hard proven data. It's factual data. It's the stock's own track record as our secret weapon. It's exactly how we knew to expect and get ready for GLD, which I have the long calls in, its rise, Netflix, its rise, even stocks that crash, like the bad pun, but the airlines once you start getting into December and then again in January, these patterns keep playing out. You got to be there. Please register ASAP. Now, some stocks to watch. How about Spot, which is Spotify? Up around 195, basically a 50% haircut down to 105 right before Christmas. Now it's starting to move. I'd want to put this one on the watch list just from a technical perspective, because if we get above the 50-day, look here, it acted as resistance in September twice. And let me zoom out. If you go to April, and once the stock started moving higher, there's almost like a trend line you can draw in here. And you know what? The 50-day institutional moving average works just as nice. Support, support. Once we get below that orange line, resistance comes down, resistance, and then down she goes. We tried to get close to it here, couldn't even do it. So from a sentiment perspective and a technical perspective, if you close above that 50-day, that's viewed as then bullish, and upside targets, you go previous swing high, and then frankly, it's all the way up there to the ledge, up in the 170s. So keep an eye on spot. Here's a stock boot that's breaking out. This is Boot Barn Holdings. Massive volume, cleared the 50-day. Target, the 200-day is just above it, right? So you might say, it's like $1.50 higher, still 5%, right? But then it's 26, then it's 28, then it's up there towards 30. The fact that this stock just kept, wishy-washy, almost like waves, right, going down, now it's launching on big volumes. That would be considered a breakout on boot. And then look at Thor, THO. Back in January, a year ago, 150. Now, 50. $100 haircut. But look what's happened here. We're starting to see volume come in just a little bit. It's not massive, but it is. And today we closed above the 50-day, something it hasn't been able to do since the August earnings report. So the upside target, there's a little bit of a swing high here. Then there's another ledge here. Frankly, it's the 200-day. And I'm not saying it's going to get there, but on a $62 stock, 85 is the next major target. That is quite interesting. What I would consider as a potential trailing stop is the 20-day EMA in red. And then we looked at this one the other day, another stock that's starting to break out, or at least looking like it might want to do something here, is Nectar, NKTR. Nice volume here lately. The red bars, the low volume. The down days are lower volume. We got a nice pop, bull flag, bull flag. We're testing the old resistance areas, but we're on top of it. Back test, back test, back test. I think the 20-day EMA could be a potential nice trailing stop to consider, again, in a paper trading portfolio like always. But upside targets, why not the 200-day? So this one has potentially a lot of room. I just like how it's moving up and then consolidating. So practice on paper, and then you can see how it plays out and see how you can catch momentum type opportunities, again, with fake money. So that's it, folks. Keep in mind, please register now before we hit max registration. I'm doing 500 seats for both events, and then it is over this Thursday, January 17th, noon and 8 p.m. Eastern. Have a wonderful day, and I hope to see you Thursday. Take care.